As of 12:21 p.m. Eastern Time on September 19, 2025, BigBear.ai Holdings, trading under the ticker BBAI, is priced at $6.59, marking a significant intraday climb of nearly 5%. The stock is showing robust momentum today, with volume already surging past 57 million shares, indicating a whirlwind of activity and sharp interest from the market. But the real story isn't just today's green candle on the chart. The critical detail that most traders glancing at their screen might miss is the immense chasm between the company's stated backlog of contracts and its actual, realized revenue. This disconnect is the central tension that defines BigBear.ai as an investment, creating a battleground between a compelling narrative and a challenging operational reality. The prevailing expectation surrounding BigBear.ai is straightforward. With AI in its name and a client list dominated by the U.S. government, the Department of Defense, and the intelligence community, this should be a story of consistent, predictable growth. Investors often look at a name like this, see the hype around artificial intelligence that has propelled stocks like Nvidia stock to incredible highs, and assume a similar trajectory. They hear about massive government contracts and envision a stable, ever-expanding revenue stream, a safe harbor in the volatile tech sector. This perception is actively cultivated, painting a picture of a company deeply embedded in national security, providing mission-critical predictive intelligence. Many retail investors, perhaps using platforms like the Robinhood Act or SoFi Invest, buy into this narrative, expecting to ride the wave of government spending on advanced technology. The expectation is that BBAI is on the cusp of becoming the next Palantir, a titan of defense tech. However, the reality of the situation is profoundly more complex and frankly more precarious. The impressive-sounding backlog, recently reported at $380 million, is the perfect example. While that number is large, a closer look at the company's SEC filings reveals a crucial detail. Only about 4% of that backlog is actually funded. The rest represents potential work on indefinite delivery, indefinite quantity contracts, which are not guaranteed. This means the vast majority of that headline number isn't secured revenue waiting to be booked. It's a possibility, contingent on future government decisions and budget allocations. This is a stark contrast to the market's general belief. The company's recent performance underscores this gap. In the second quarter, revenues didn't just fail to meet expectations, they fell 18% year-over-year to $32.5 million. Management was forced to slash its full-year 2025 revenue forecast from a range of $160 to $180 million, citing postponed U.S. government contracts. This isn't the picture of a company firing on all cylinders. It's the picture of a company struggling with the slow, bureaucratic, and often unpredictable nature of government procurement. While its competitor Palantir is reporting surging government revenue, BigBear.ai is explaining delays. The stock's recent chart tells this story of conflict and volatility. Over the last year, BBAI has been on a wild ride, soaring from a 52-week low of $1.36 to a high of $10.36. This isn't the steady climb of a mature, stable company. It's the spiky, erratic movement of a highly speculative stock, driven by news, sentiment, and the broader AI narrative, rather than consistent financial performance. We see huge volume spikes on days with press releases, followed by sharp declines as the market digests disappointing earnings. This is a trader stock, not necessarily a long-term investor's dream, and it's being actively managed on platforms like Interactive Brokers trading desks and through self-investing accounts everywhere. The high volume we are seeing today is characteristic of this pattern, a strong positive reaction, but one that exists within a much larger context of uncertainty and a history of sharp reversals. Institutional investors, the kind that might utilize Fidelity Wealth Management or build portfolios with Fidelity ETFs, are present, with firms like Vanguard and BlackRock holding significant stakes. However, the sheer volatility indicates that many are taking a speculative position, rather than building a core holding within a diversified investment strategy like a Schwab Intelligent Portfolio. So, what does BigBear.ai actually do? The company provides AI-powered decision intelligence solutions. In essence, it builds systems that take vast, complex datasets and generate predictive outcomes to help leaders make better decisions. Its core markets are national security, supply chain management, and digital identity. For the U.S. Army, it's developing systems to manage force readiness. For Homeland Security, its technology is being used to expedite traveler processing at airports. These are undoubtedly critical applications. The issue isn't the importance of the work, it's the business model. Unlike Palantir, which has a foundational software platform that can be adapted for various clients, BigBear.ai often appears to be building more customized, bespoke solutions for each contract. This approach is less scalable and carries lower gross margins, which have fluctuated between 20 and 35%, a far cry from the 80% margins Palantir consistently enjoys. This structural difference is a major red flag that the market narrative often ignores. The company is also deeply unprofitable, posting a staggering net loss of over $228 million in the second quarter. While some of this is non-cash items, the underlying operational cash flow remains negative, and the company's earnings per share have consistently missed analyst expectations. Looking ahead, the future of BigBear.ai is balanced on a knife's edge, presenting two very different potential paths. The optimistic scenario is that the company successfully navigates the government procurement labyrinth and begins to convert its massive unfunded backlog into tangible high-margin revenue. If it can demonstrate a clear path to profitability and showcase a more scalable product offering, it could begin to grow into its valuation and justify the market's AI-fueled enthusiasm. New contract wins, especially in the commercial sector, would be a significant catalyst signaling a diversification of its revenue base away from its heavy reliance on the federal government. Expansion of its partnerships, like the one with the Washington Commanders, or its cargo security venture in Panama, could provide new avenues for growth if they prove to be more than just headline-grabbing announcements. Conversely, the pessimistic scenario is that the operational struggles continue. The company could remain trapped in a cycle of contract delays, revenue misses, and persistent unprofitability. The high stock volatility and negative cash flow could necessitate further capital raises, potentially diluting existing shareholders. Competition is another significant risk. BigBear.ai isn't just competing with Palantir. It's up against established defense contractors and massive IT service firms like IBM and Accenture, which are all vying for a piece of the government's technology budget. If the company cannot prove that its solutions are materially better and more cost-effective, it risks being marginalized. The stock could then be relegated to the status of a perpetual show-me story, with its price continuing to be dictated by short-term news flow and retail sentiment rather than fundamental strength. I want you to comment below with your honest take. Do you see BigBear.ai successfully converting its backlog and challenging Palantir, or will its operational issues keep it a highly speculative play? In conclusion, the story of BigBear.ai is a classic case of expectation versus reality. The expectation is of a fast-growing AI powerhouse with a secure government client base, a narrative that is easy to package and sell to investors looking for the next big thing in tech. It's a story many using online investment tools are buying into. But the reality is a company with flat to negative revenue growth, low gross margins, significant net losses, and a backlog that is far less certain than it appears. Today's price surge is encouraging for short-term holders, but it doesn't change the fundamental challenges the business faces. The path forward requires a transition from winning contracts to executing them profitably and scalably. Until that happens, BBAI remains a high-risk, high-reward proposition where the compelling story of what it could be is locked in a fierce battle with the difficult numbers of what it is.